Mike, it's a huge pleasure to have both Margarita and yourself here on the stage and to have this chance to talk to you.
Of course.
And of course, you're now based here in the UK, which is fabulous. So we'll talk about that in just a moment.
Okay.
But I'm going to start because Margarita's still in the room. You are a shareholder in Vodafone.
I am. Yeah.
And we've just heard from Margarita. She's been there for just over a year. Do you have any perspectives? How's Vodafone doing?
Where did she go? Honestly,
She's
I am a huge fan. I think she's doing a fantastic job. Seriously.
Okay.
I'm not just saying that. I mean, she came in to a very difficult situation. She had three big challenges. She talked about one of them, growth, but also, and the perimeter, but also a capital allocation model. So she's cut the dividend, not an easy thing to do. She's announced a €4 billion buyback or pound buyback, which of course we appreciate. And the market seems to agree. It stock's up 20% from its low in February. So we're thrilled. I mean, we need leaders who can make tough decisions, who can be, take action, which is what she's had to do and has done very well. But are growth-minded and fundamentally easy to work with. So we're partners in Holland. She's been a great partner. So I'm a big fan, and I think she's done a great job. And then next year, I want you to switch the order so she can say some nice things about me. But seriously, I'm not
I will note that. I will note that for the team.
Yeah.
Okay.
You got it.
So now let's switch to Liberty Global. If we look back, you've got a long history in the industry, over 30 years, and that history bears huge relevance for the nature of the business that you have today. And I just wonder if you could share some reflections on that journey, and how you've come to the business that you are now.
I don't think 13 minutes is going to be long enough.
But hey, we're going to keep it tight, because I've got a couple of other questions.
Yeah, of course. No, I'll give you the 2-minute version. So I have been in this business a very long time, 34 years actually. I was the 5th employee of the predecessor company, and the premise was quite simple, that while John Malone was busy consolidating the U.S. market, we were convinced that cable television, multi-channel television, had an opportunity abroad. That people might want to watch CNN and MTV. This is in the 90s now. And we started with $20 million of seed capital, and over the next 10 or 15 years, we invested in 50 different countries and 5 continents. And it was a great business. It was a golden age of television. You might remember those days, hundreds of channels. Broadband was easy pickings because the incumbents hadn't figured it out yet. So we were, the race for market share was really not a fair race at all. But about 10 years ago, it became clear that if we wanted to compete with incumbents and people like Vodafone, that we needed 2 things. We needed national scale and we needed mobile. We were a mile wide and an inch deep. We needed to be an inch wide and a mile deep. And so we exited Asia, we spun off Latin America, we sold a bunch of assets in Europe to Vodafone and others. Fortunately, at good timing, at very good multiples. But the goal was to create national scale. Where we could build national scale, we stuck, like in this market. And then we leaned into mobile. So we made our first mobile acquisition in 2015. We did the Vodafone merger after that. We bought Sunrise in Switzerland, and of course we did the merger here in the UK. And I think that that fixed mobile convergence is very real and very critical for us. And we've got a long way to go. We can talk about it, 5G and fiber, but we're in the right place, the right markets, and I think with the right infrastructure today. Okay.
Now, earlier in the year, you made some quite pivotal portfolio decisions. And how are they playing out? Where are they progressing to?
Yeah, so let me repeat what Alex said. The stock market does not put a lot of value on these stocks today. I would say sometimes negative equity value, in fact. And there's a few things going on here. One is growth. We need to find that growth that we've sort of lost a bit of. Secondly is the capital intensity point you made. Third is the regulatory point Margarita made. And fourth is this sense that there is disruptive forces all around us. It's just a matter of time before these guys are disrupted. And so as a result of that, I think we made a decision to do really 2 principal things. One is to maximize the value of our operating businesses and share some of that value with our shareholders. So in the case of the UK, for example, we announced a NetCo here. Why did we do that? Well, we're already building 16 million homes, fiber upgrade to 16 million homes, building another 5 to 7 million homes. We'll reach 80% of the UK market. We know that investors will value that infrastructure differently than our shareholders, so we can raise capital through that infrastructure to accelerate our own build-outs. And that's just a natural opportunity for us. In terms of Switzerland, which you referenced indirectly, we've owned this business for quite some time. It's a great asset. It's 12% of our aggregate EBITDA, if you will. We have 25 billion of revenue, 50% of that's mobile, by the way. 9.5 billion of aggregate EBITDA, and Switzerland's a very small piece of that. But we've decided to list it and spin it off.
Yep.
Why? Because we are mostly U.S. shareholders in our stock who do not appreciate being number 2 to Swisscom in every product, which is actually quite an enviable place to be. And so we're going to spin it off to our shareholders, make it a public company, and we think that'll be a very positive event. Analysts, this is the math of it, analysts think that it'll be worth $11 a share, 12% of our EBITDA, and our stock trades at 17. So this is if you're not focused on value creation,
Yep.
which we all are as CEOs, value creation for, of course, communities and customers, but also for shareholders, you're not going to get the credit you deserve. So we're focused on that. And then the third thing is investing in ventures, which is a longer conversation, but we want to find the next great platform with tailwinds. So we're in tech. We've got lots of investments in tech companies, 50 different tech startups. We're in content. Of course, we sold all 3, but we're in Formula E and ITV. And we're in infrastructure, really a growing infrastructure. A $3 billion portfolio in total that we're leaning into with our cash and our expertise to find some tailwinds in this sector.
Mike, how do you think about those ventures decisions as a team? So as you scan the market, you look deeply at it.
3 verticals, tech, media, and infrastructure.
Yep.
Looking for outsized returns, of course. Okay. And fundamentally, things that can be large platforms. We want the next great business. We don't want to necessarily own small pieces of a lot of things. We'd like to own bigger pieces of some big things. And it's a pivot for us, but I think one that we're well positioned to take advantage of.
And geographically, do you?
Mostly Europe, but we'll look anywhere.
Okay.
Yeah.
You will look beyond. But I'd like to turn from Europe into the UK.
Sure.
Your new home.
Yeah.
Welcome. It's lovely to have you here.
Yeah, it's good to be here.
We've got Lutz and Patricia on the UK panels later on, and they'll give a little bit of a VMO2 perspective. But from your perspective as an investor into the UK, you've talked about Europe broadly, through various shareholdings, including VMO2 and Nexfibre. What makes the UK an attractive place now to do business and to invest in? And A, what makes it an attractive place? But B, what would you like to see evolving in our investment environment to make it an even more attractive?
Yeah, fair question. Listen, it's our biggest market for sure in terms of where we're committed and the capital we have invested in, and we're here for the long term. So that's point one. There's a lot of positive things about the UK market. Everybody in this audience knows that. I mean, it's a vibrant digital economy. Netflix penetration is higher here than in the US.
Yep.
The tech sector, is the best in Europe by far. I think you get more unicorns here than the entire continent combined. So a lot, and the investment climate is favorable too. So there's a lot of positives, and we're really thrilled with Virgin Media O2. Lutz and Patricia will speak later. That company has scale. It has some really strong growth drivers. Of course, fiber and 5G and fixed mobile convergence, and new footprint expansion, which is great for broadband and mobile. So there's a lot of positive things here, and we're very, very satisfied and happy to be here. There's some challenges. Let's be honest. Margarita alluded to some of them. This market needs repair. I mean, it's one of the few markets with 4 infrastructures on the mobile side. I mean, China doesn't have that, US doesn't have that, Germany doesn't have that. Why does the UK need 4 mobile infrastructures? I can't figure it out. Yep. And there's dozens of brands. You could all go out right now on your phones and choose from dozens of mobile brands. It is a crowded mobile market. And I think the merger that they're trying to get done makes a lot of sense. We have some issues around spectrum and our network sharing arrangements. We'll sort that out. But I think that deal makes a lot of sense. Similarly, in fixed, man, I think there are 100 people trying to build fiber. They've raised anywhere from 15 to 20 billion pounds. I don't know the exact number, but what I do know is that they hope to build the entire UK market twice. On top of us and BT still. I mean, it's not sustainable, and I'm not being,
How soon is that consolidation going to happen?
Well, we're looking actively at another reason to create the NetCo that we're creating is to be an acquisition vehicle for rationalization of this fiber investment. So I think it's just a matter of time. I mean, our pipeline is pretty long.
And how far do you see it consolidating?
I mean, I think there'll be two nationwide networks. We're one of them. Yep. Openreach will be the other. And I think there'll be perhaps 1 or 2 sizable competitive platforms. That's fine. But 50, it's not sustainable. There is no market on the planet where that's worked. So we have a lot of reckoning to do here. And I think regulators get it. I think they get it. I mentioned it to powers that be, every time I'm sitting with them, we'll see what happens. So there's some challenges, and I think fundamentally we're here for the long term, and there are a lot of growth drivers for sure, but there's definitely some challenges.
And what would you like to see from an incoming UK government that could help make this environment even better? For an infrastructure that's pivotal to all the innovation in this country.
Yeah, I mean, if you think about it, what we're doing is critical. It's critical not just for consumers who watch Netflix. It's critical for businesses, for hospitals, for educational institutions. Everybody requires fast, low latency, reliable broadband connectivity, fixed and wireless.
Yep.
And that takes a lot of money. We are investing billions. I know Vodafone is investing billions. And it's a highly competitive marketplace. I mean, Enders, I think I read a report just the other day, contrary to what Alex said, I like his story better. But they were saying it's a bleak future, I think was the terminology that Enders thinks we have in this marketplace.
We'll check that with
because we won't be able to take price increases anymore because inflation is down. There's too much competition. Altnets are driving ARPUs low. I mean, you can craft some stories here. Mm-hmm. If regulators and politicians want a vibrant, thriving infrastructure economy, then they have to allow that to happen. And that's the commercial arrangements we need to see.
Yeah, so when you step back and look at the outlook for the industry overall, you've seen a US market where the industry has thrived, a very different regulatory environment and structure,
right?
Very different market structure.
Yeah.
And Europe that has been very constrained, has delivered for the consumer, but has failed to deliver for its infrastructure. And I just wonder, when you stand back, are there some big messages that you would give with that lead-in?
Yeah. Well, listen, I think Margarita made those points well, and I'm sure Allison and others will too. Let me give you the glass half full side of it.
Yeah.
Because I'm actually a glass half full person, because you can't do what I do as long as I've done it and not have optimism fundamentally somewhere inside of you. Yeah. And I know Margarita does too. But I think there are some tailwinds that we can expect here. Number one, I think we operate, all of us, no matter what part of the business you're in the most exciting ecosystem on the planet. Where would you rather be than in this room talking about this stuff? Whether it's streaming or content or media or Amazon or big tech or telecom, this is the place to be. Yep. So we're all fortunate to be in this ecosystem. That's number one. Number two, I see this ecosystem bending our way. What do I mean? Well, last time I looked, streamers had it tough, and they're coming to us for bundling and billing, so they need us, no question about it. We're critical infrastructure, as I just said. Data consumption has gone up tenfold in the last 10 years. It's going nowhere but up. You will all consume more data tomorrow than you did yesterday. And so it's a good place to be fundamentally. I really think we're in the right place. There's new revenue streams we haven't tapped into. Yep. Smart home, we talk about smart home. What does it really mean? Well, be patient, because it means there's a tremendous amount of things that both AI and our infrastructure will allow us to do in the home we're not doing today. B2B, of course, as Margarita mentioned, it's 20% of our revenue. It should be 40% of our revenue. The fastest growing sector in B2B is ICT, which we're barely scratching the surface on. So there's huge potential in B2B. And lastly, AI. AI is, it sounds trite, is a game changer. No question about it. And I'll tell you, this is a quick story. It's still kind of stuck between two worlds. I was in Davos. The morning meeting was all the ICT sector. We're sitting around the table talking about AI, how great it's going to be, the opportunities, what do we need, what stumbling blocks do we need to get through? This is awesome. This is the future. In rolls the media governors to join our meeting, and for the next hour, all we talked about was the existential threat and risk to society, to content, to IP. Very real debates, but I will tell you, we are nowhere connected on these two things. That's a concern. It has to we have to sort of break through that sort of a dichotomy here. I'm more of an optimist. I think there are concerns on IP and creativity and all that good stuff, and social risks for sure. But for us, there's 4 key use cases we're focused on. I only have a minute, so I won't get into them. But I'll just give you one that we've already rolled out in Holland on a trial basis, and it's called Agent Assist. We get 50 million calls a year in our group. 50 million phone calls from customers a year. We've trialed this in Holland. It allows the person answering that call to see a summary of who's calling, what their last few issues were, and then summarizes the call for them so they don't have to type it out. We're saving 20 seconds a call times 50 million calls. Just do the math. That's just one small application, and we've got many more behind it. So it really is going to be a game changer for us and for an industry that needs some tailwinds. I think it'll be powerful.
Huge efficiency, huge productivity gain through AI.
Yeah.
What about the growth gains, the real extension of the industry, data use, et cetera?
We have a handful of applications. If you're a Virgin Media customer or an O2 customer, there are a handful of powerful applications residing on your phone or in your set-top box that you don't know about.
Yeah.
You're not using them. Yep. You don't want to use them. You don't know how to use them. But if we can get generative AI, if you can speak to that remote to say, I want to set up a Wi-Fi sharing network because I have friends coming over for the game, and you just have to say it, not type it, find it, where is it on the screen, settings. That will allow us to make customers much happier than they are today. You know, shortening phone calls, better customer service, better network quality. All these things are self-reinforcing for a great customer experience, and that's what we're trying to do.
Brilliant. Mike, on that note, because I think that's a great note to end on, thank you, and thanks for being very frank and clear with us.
Thanks, everybody.
Thank you very much.